Hello guys, welcome to another video. So in this video, I'm going to be showing you how we mark structure from A to Z and how we take trades using the structure we have just marked, right? So on our screen here, we have the trade Euro USD and we are going to be using it as an example to demonstrate to you how we mark structure using the strategy called True SMC, right? So basically, True SMC is just an advanced SMC that is being used, right? It has simplified many of SMC concepts and it has made it easy for us to easily trade in a market without the SMC complications. So without wasting any of your time, let's dive right into the charts. And before we do that, if you are new to my channel, consider subscribing and liking this video, right? Leave a comment on what you think I should cover next and I'll be glad to cover it for you in our next video. So without wasting any of your time, let's go right into the charts. So first of all, let's run through our concepts, right? We said if the market happens to be pushing down, the what we want to see before we validate a break of structure is the market to take out the first inducement, right? So once the market takes out that first inducement and gives us a break below the low that caused that inducement to be taken out, then we have a break of structure. So basically, this is a break of structure at this zone here. So this is a break of structure at this zone here, and this is our inducement. So this is just to see which low has taken out inducement and which low has not taken out inducement to then identify our first low in order not to trade from fake highs, right? Because from here, if you trade from this high, then you will be stopped out. So I'm sure majority of you might have faced this issue. And also in our last class, we also talked about minor and major inducement. Now, when we said a minor inducement is an inducement that occurs before the break of structure. Now we have this market has taken out this inducement here, and from this high to this low, right? Any pullback that occurs within this low is what we refer to as minor inducement. So for us to have a major inducement, we will need it to occur after the market has broken above this low. So once the market breaks above this low and creates a pullback like this, now this becomes our major inducement. So what did we say we use major and minor inducement for, right? You can use minor inducement to enter trade to validate structures, but major inducement is what you should primarily use when you want to enter trade. It doesn't mean that if you use minor inducement to enter trade, it will not work. That right? It doesn't mean that it will not work. It only means that it will reduce the probability of that trade working out in your favor. So these are some of the points that we talked about in our last class. Now, also, when the market has given us a break of structure, we have what we refer to as a trading range, right? After a break of structure from that high that caused that break of structure to the current low, is what we call a trading range. Now, in this trading range, right, currently the market is here. So for this lower low to be confirmed here, it will be confirmed once the market takes out the first inducement. It doesn't matter whether it's minor or major, right? So once the market takes out the first pullback, then at this point now, this low is confirmed as our valid lower low here. If the market goes ahead to break structure, then we'll have a break of structure. If it goes ahead to seek more liquidity or go deeper into this pullback, then we have and still goes to break structure, it will still be our next valid break of structure. Now, in this case, right, if we never had this major inducement here and we also have a minor inducement like this one, the market goes ahead to take it out, then goes ahead to break structure, we'll still have a valid break of structure. Now, also in this trading range, there's what we call some smart money traders go ahead as having a discount and a premium uh, zone in this trading range, right? So a premium zone is just you divide this zone into two parts, right? 50% and the part that is found above the remaining 50% is this premium zone. The part that is found below the premium zone, right? Below the 50% is your discount zone. So when you are looking to maybe sell, you can be looking to sell at a premium, right? You buy at discount and sell at premium. Obviously, since this is a downtrend, buying doesn't make sense, right? So you'll be planning to sell just when the market is at the premium level. So I think let's go into the chart, then we figure this out and mark out the real chart, right? So this is a chart for Euro USD. And if you happen to start by marking out the chart, let's start over here. We start over here. This is our first break of structure as far as I can see. Now, the reason why I mark this a break of structure is simple, right? We have an inducement being taken out. So this is a pullback here. And in this case, this is what we call a minor inducement. This is a minor inducement here, right? The inducement got taken out. This inducement formed before the market broke above this high. So this is our minor inducement. So after this minor inducement has been taken out, you can see that the market rallied up, right? While it was rallying up, it created some few pullbacks as well. The one of the last pullback was this pullback here. So after this last pullback was taken out, right, which was our inducement in this case, the market got into this zone, and from that zone now, you can see this rally to the upside. Right, from that zone you can see this rally to the upside, and after this rally here, right, the market in its first attempt in the market's first attempt here, it failed to break above this high, so it eventually pulled back. Now while this market was pulling back, we still had this trading range, obviously, because the market has tapped into our range. It has given us, if you're using this time frame, it has given us a change of characters here. After giving us that change of characters, it pulls back, taking out our inducement, right? Taking out our inducement here, and it taps into this point of interest. So this is a small point of interest we have here. So once it taps into, it goes ahead to give us our next break of structure to the upside. So if we are marking this definitely is our break of structure to the upside, right? That's what we supposed to mark out here, break of structure. So after this, the market continues in its uptrend. So recently, our most recent break of structure to the upside occurred here, right? This is our recent break of structure to the upside, BOS. So now we use the same concept, right? We have a pullback here. This is our pullback here, right? And the market takes out this pullback. It takes out this pullback low here and goes ahead to take out this high here, which acts as our breakout structure. So after taking out this high, we have what we call minor and major inducement here. So in this case now, this is the first pullback that we had in this zone, which was our minor inducement, right? So from this minor inducement, this will be our major inducement. Now, in this case, this will be our major inducement, and this will also act as our protected low. If the market happens to come and sweep this low and continue to the upside, then we have a continuation in price, right? That will not be a change of characters because the market just swept the low, and that was our major inducement. But if the market happens to take this low and close below, then we have a change of character. So you can clearly see here that the market did take out this low and close below this low, right? So this is actually a change of characters that price wants to start pushing to the downside. So we label that CH, right, which is a short form for change of characters. So after a change of characters, what do we have? Now, this is where majority of the people that trade these concepts get confused, right? After a change of characters, from that high that caused that change of characters is to the current low, which was somewhere around here, is our trading range. Now, before you trade from a trading range, obviously you need one thing, which is inducement as well. So if you start from this low, you look upward, you see that this low was not confirmed here until this market here took out this inducement here. Once this market took out this inducement here, our our lower low here was confirmed. So after this lower low was confirmed, what do we look for? What do we look for here? Right? We are expecting the markets to continue to the downside since we have a trading range here, and on this time frame we don't clearly see a pure eye here, though there was a pure eye here that I marked out, but we don't clearly see a pure eye here on the 15 minutes time frame. So what we do is the market has already taken out our inducement, right? So we mark out our next break of structure our next break of structure, which is this here. So after this our break of structure, we still have ways to mark out, right? We still need to continue marking out. So looking from here, we don't have any inducement after this break of structure. So what we have here is this inducement here, right? So this is our internal, this is, sorry, our minor inducement. Now, like I told you, right, if we have only a minor inducement in this case, then this high here becomes our major inducement, and it's possible for the market to come and sweep that high before it continues to the downside. So it's possible for the market to come and sweep the high before it continues to the downside. So from what we see here, after the market went ahead, took out this minor inducement, it failed to continue that immediately to break this low to the downside. So what the market did is it came up to this high and swept it here, right? It slightly swept this high. After doing that, we had this change of characters in our internal structure, right? This is our small change of character. So after that, the market seeked out for a small inducement. So after seeking out for this inducement, it got into a pure I, and so some of these trades I normally send them in a group, and I think this particular trade I also send it in a Telegram group. So guys, so if you are not in my Telegram group, you make sure that you join out the Telegram group, and yeah, you'll get to see some of these trades in real time. So now after this, right, what are we waiting for? We're waiting for the next pullback. We're waiting for the next break of structure. So if you look at price here, you can clearly see that okay, price looks to have to have broken structure here. This is where the next break of structure occurs. Now, after the next break of structure, what do we still wait for? We wait for inducement to be taken out as well. So this is our next break of structure. Why? Price has already taken out this minor inducement. Remember, I said we can use a minor inducement to mark our structure, but when you want to enter trades, is if you want high probability, you can use major inducement, or you can still use minor inducement, right? But it will reduce the probability of your trade. So if we go ahead, we are going to see that starting from this high, right? We don't have a pull, we don't have a measure inducement here. All we do have is we have this first pullback here, which is our minor inducement. So how do we deal with this in this case? We need to wait for the market to at least take out our minor inducement, right? We need to wait for the market to at least take out our minor inducement. Let me adjust that. And from here you can see that the market swept this minor inducement here. So the next thing we have is our next break of structure. Sometimes you need to be very keen. You need to be very keen in the market to observe some of these things. The market swept out our minor inducement here, if you can rightly see over here, right? So now the next thing we wait for is for our next break of structure, and the cycle continues. So from here we have this next break of structure, right? After this next break of structure, what is next again? We still wait for the same cycle. Now here we have this inducement here. Now let me confirm if this was a major or minor to observe some of these things. The market swept out our minor inducement here, if you can rightly see over here, right? So now the next thing we wait for is for our next break of structure, and the cycle continues. So from here we have this next break of structure, right? After this next break of structure, what is next again? We still wait for the same cycle. Now here we have this inducement here. Now let me confirm if this was a major or minor zone here. Okay, so this is our minor inducement here. So after this minor inducement has been taken out, what again? The market simply goes up and respects this order flow here and drops. After the market drops, what was the target of the market? It's going for the external low to give us a break of structure. So here I don't mark this as break of structures as well, because this is for me this is a sweep. I actually somehow bought from here and targeted this side here. So after that happened, what I waited for is for the market to take out inducement again, right? So for me, this is where my true break of structure actually occurred. This is where my true break of structure is actually occurs. Sometimes you might see me indicate that with an arrow of something like this. So when I indicate like this, it means that this break of structure here, I do not consider it valid, but I consider the next one because the previous one was a sweep, and most at times this will act as a liquidity sweep, maybe to reverse market to the upside. So that's why we really don't consider this. Now, you might be asking, right, from here, what do we see that we got that trade that we sent in a Telegram group that we had a sell over here? Now, from here, we have this minor inducement being taken out. There were some people that kind of missed that the last trade we got on Euro USD. That was due to the fact that they selected a POI right up here. Now, from what we had the POI here. The reason simply is because starting from that high down to the low, the last candle with an imbalance is this zone here. That is how we came about that trade that we had in Euro USD. So for this week, what I'm looking for is simple, right? We have this low here. It's either the market goes below this low like this. If the market goes below this low, right, this becomes our valid pullback here, and we can look to maybe get a sell of this other flow. If it goes below this low, then we can wait for the market to retrace like this, and we can look to get a sell of this other flow. Now, you need to know that on a daily time frame, the market is bullish, right? So we are trading internal structure. So if this happens, right, this now becomes our inducement here. This now becomes our high, and we can look to sell here. So this will become our major inducement. If this doesn't happen in during by the week or during this week, then we can wait for the market to at least take out this internal pullback here, which will act as our minor inducement, right? If it takes out this pullback, then we can look to take a trade of this other flow, or we consider the market to sweep this high. We consider the market to sweep out this high, right? Since this high will now be acting as our major inducement in this case, so we will be considering the market to sweep out that high and then continue to the downside, something like that. So if the market happens to sweep out this high and gives us a confirmation, then we'll be looking to trade off from here. So guys, I think that is it for this video. Thanks for watching, and this is how we mark out our structure, right? We try to make everything as simple as possible. First of all, if you look from here, we started by marking out our change of characters, and then we have been able to mark out all our structure as it plays out in real time in this zone here, right? So this is how we mark out, and for the trades that we successfully got into, where this trade here, this was one of the trades that we successfully got into, right? Before I started this video, I kind of erased some of this. We got into this trade, it got in this trade as well. The results were posted in the Telegram channel. These are the three trades that we got into during this week. There was also another one here, another trade here. I think, yeah, that was our entry. No, our entry was up here. Our entry was a little bit up here. After this, there was a small order flow there, so that's where we entered. So these were the trades we got this week. And yeah, all of these are posted in the Telegram group. You'll find the link to the Telegram group in the description of this video. So feel free for you to leave a comment on the comment section asking us, right? Ask us your questions. I'll get back to you. I'll make sure I answer everybody. And for now, yeah, EU is still bearish on this 15 minutes time frame, right? I've not done total analysis on it yet. So top down, when you want to determine your entry, you need to start from top down analysis to determine the actual direction of price. And as of the moment, I've not yet done top down analysis. So I'm still relying on what the 15 minutes is telling me. So guys, that will be all for the video. Thanks for watching. God bless you all. Have a nice weekend.